Okay, welcome back. You're watching Trading Calls live on ET now. No market improvement in Asian markets. Asian markets are trading with a downward bias. Crude has corrected. Gold also has retreated. So in general, there seems to be a bit of a profit booking, profit booking mode, which is evident. Global markets are correcting because money managers now are of the view that the US Fed could pull the QE3 plug ahead of its time. The US Fed suddenly seems to appear divided on how to approach quantitative easing in the coming months. Nasdaq is down, Dow's down, global volatility has shot up, and the only silver lining this morning is that crude prices also have retreated along with other asset classes. So at the current juncture, is it a good time to put money to work, and how exactly should investors prepare their portfolios in the run-up to the budget? Let's discuss that with Ajay Bodke, Head Investment Strategist Advisory with Prabhudas Leeladhar. Ajay, good morning. Thank you for joining us. What's your sense, Ajay? Do you think Indian markets have some kind of a stumbling block, and currently the scales are clearly tilted in favor of the bulls or the bears?
I think the markets are finding it difficult to break out of a range, and this is in spite of nearly $8 billion of massive inflows from the foreign investors that we have seen in the first 2 months. The domestic institutions continue to be net sellers, and the retail investors continue to be lackluster and watching from the sideways. I think the 2 or 3 issues. One is the government's firm resolve in pushing through diesel deregulation has been taken very positively by the market. There were many doubting Thomases who believed that the government would not allow the oil companies to increase the prices on a continuous basis. But they have laid to rest all these doubting Thomases by allowing the oil companies the free hand, as they had said last month, to allow price increases. And I think the oil minister said that this will be a continuing feature till such time that the total under recoveries on diesel, which currently stand at around 9 rupees, are completely wiped out. Why this is important from structural perspective for Indian markets, I feel, is because if you look at the total under recoveries in fuel, will be around 160,000 crores for the full year, and the NREGA program of the government is around 28 to 30,000 crores. So in effect, any massive savings, say, or 94,000 crores out of that 1.6 lakh crores is diesel under recovery. So in next 1 or 2 years, if that under recovery is brought down to zero, I think the resources available to the government for spending on both plan expenditure as well as on welfare measures, I think get a substantial boost. And this is the reason why I think the markets are quite enthused with the government's resolve in to tackle head-on the subsidy issue. And the second issue also has been the fact that RBI clearly has softened its stance, and we are expecting over the next 12 months interest rates to come off by around 50 to 75 basis points. Also, the massive torrent of liquidity in the global markets this time round has not led to a sharp rise in commodity prices, and that spells good news again for India. So I think from the medium term perspective, that is the reason why I think FIs are enthused and are pouring in such large amounts of money in the Indian markets. Obviously, I think from here on, one will have to see the how the corporate India, I think is able to take advantage of this environment of low interest rates coming off, commodity prices remaining benign, and the earnings growth profile of the companies going forward, I think will determine the trajectory of the markets. But I think I personally am quite
Back with the trading calls right here on ET now. Not quite supportive when it comes to the global mood this morning. So both the Dow and the S&P saw losses for themselves. More importantly, the STX Nifty as well is indicating weakness. In fact, well below the 5950 mark as well. Good time the 10 to get you stock-specific ideas on that note. Mitesh, what is it that you've picked out?
Well, a few sell calls on banking stocks. The bank Nifty does look weak, and I've identified Axis Bank to be sold with a stop at 1461 for a target of 1400. Similarly, a Federal Bank also looks weak, and Corrective can be sold with a stop at 510 or just above it, and look for a target of 480. Grasim is a buy, but I would want to see the stock price trade above yesterday's intraday high of 3075. So buy above 3075, keep a stop at or just below 3040. Look for a target of 3140 on the upside. United Spirits or McDowell's is a sell with a stop at 1880 and a target of 1765 is what I'm looking at on the downside. And HCL Tech is a buy with a stop below 707 for a price target of 745.
Ajay, this question is coming your way, and many experts this year are of the view that budget is more like a no event. You know, this is more like a 100-point Nifty event. Budget comes on Thursday and Friday when markets will open. It will be back to square one. Markets will track global liquidity, crude and Dow.
Well, I think 2 or 3 issues market will be looking from the budget. One is, what are the measures that the FM announces to revive the moribund capex cycle in the industrial and infrastructure sector. Whether he emphasizes a time-bound implementation for some of the marquee infrastructure projects. And both the railway budget and I think the union budget will be looked forward to, because some of the largest projects that people are talking about will sort of be coming from the railway sector. And I'm specifically referring to some of the large projects like the dedicated freight corridor, the progress therein, or the Delhi-Mumbai industrial corridor, or some of the other projects like the elevated railway suburban system for all the 3 lines, or the bullet trains that are expected to sort of in Mumbai, Ahmedabad, or some other sectors. Also, the boost to metros is what the market will be looking for. So I think infrastructure and industrial capex will be the focus from the investors' perspective. And the second issue sort of the markets will be looking at is how the FM achieves 4.8% fiscal deficit for next financial year, whether he goes in for planned expenditure cuts as he's expected to do this year, or whether he cuts down on subsidies will also determine the course of the market.
Yes, indeed. You know, it's the budget arithmetic which also will be important. The finance minister has openly alluded to the fiscal deficit number for FY14. So how exactly will he arrive at that number? But the big lottery to my mind will be if he does something special to revive the investment cycle. Consumption is slowing down, investment cycle is yet to pick up, and for economic growth to revive, it is the importance of investment cycle which to my mind will really occupy center stage. Okay, let's look at DLF. Now, DLF in last 3 days has appreciated and has appreciated by more than 10%. Ashwini, what's the deal with DLF? 279, it touched a new high yesterday.
Well, 280 was a previous significant support, and now that it's gone up 4 days is probably not the greatest time to get in. But definitely it seems like longer term trends have changed above 260. So in any sort of correction, if you get it around 255, 260, I think DLF should qualify as a buy. But all of these analyst reports, etc., you should take them with a pinch of salt and don't overstay your welcome. Don't expect 1200, etc. But I think 330 to 350 is possible.
Ajay, now there is a reason why large cap IT stocks are outperforming Indian markets, but at the current juncture, after the recent run up, do you think large cap IT stocks, especially Infosys and TCS, are they fully priced in?
Yeah, I think the commentary that had come from NASSCOM a week and a half back is sort of quite positive. They're expecting the total revenues to go up between 12 and 14% for FY 13-14. On the back of 10.2% growth that they're expecting for FY 12-13. So I think a modest recovery sort of which is underway in America, the largest market for these large cap IT stocks, clearly sort of is underpinning the buoyancy in sentiment that one is seeing in the IT names. And I think the performance of the IT sector in the quarter gone by also has been quite inspiring. I think if you look at our estimates, we were expecting a total revenues for IT companies put together to go by 15.8%, whereas actual growth has been around 17% for on the top line. And on the bottom line, as against 11% growth expected for the IT sector, the growth has been around 15%. So clearly one is seeing sort of signs of the sector coming back in favor and performing well. I think Infosys in fact has been on our top buy list the last 4 to 5 months. I think finally the company has delivered, and we continue to expect both Infosys and Wipro to favor these two companies over other companies.
Okay, Ajay, good to have you on the show. Appreciate you taking the time out and joining us today. Well, week, that's how the stage is set for us to start this morning. Let's bring in Deepak then to chat about his trading calls. Deepak, what is it that you've picked out?